GM. All right. We don't have red flag news until later in the day, which is good.
Wake up every morning and say GM.
GM. GM. GM, 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 GM. Alright. Here we go. Monday. New week. New month as well, of course. We're starting off in February with a little bit of downside. February has already taken out January's low and so far bouncing, as I mentioned last night, on the lower time frames with this price path I was watching for. We got that early off the weekly open, taking out Saturday's low into that 75k area, getting a bounce from here. So lower time frame, we'll be watching to see if that is going to stop at this first resistance, 80k being the big round number. But this gap down from Saturday basically was the weekend selling, because all this came through Saturday. Was that weekend selling a sign of things to come for this week, or was it overextension, panic selling to the downside? We'll see. It's into an area where there should definitely be support. It's retest around 74 of the prior highs, retest of the yearly low from 2025, also the 75k level. But as I mentioned yesterday on Beyond Bitcoin, coming into a support level when it's falling is different than when it's rising. So not so much different to 80k and the 100 week. So when we lost the 50 week, which was our main support, lost the 50 week, came into the 100 week, it held, and it held for a few weeks for a bounce to the 50. Same thing coming back into 75. It's a full retracement of the leg of April up to October and back to the lows. We've also retraced it faster than we rallied. So the rally went from April through October, about 6 months, and it's unwound quicker, so more momentum. Downside obviously is picking up, and I think that would be somewhere to watch for a temporary pause. But also with the markets the way they are now, I will be watching for simply a catch up, I think, to the downside, as we have stocks pull up NQ on one side and a separate BTC chart on the other side here. Being down more than 40% at this point, so top to bottom 41% off the highs, and stocks barely off the highs at all. From the all-time high to now is 3%, and from the recent high is also about 3%. So it's not to say Bitcoin can't go down further, it can, but if it's a leading indicator of risk off, I'd be watching more so for weakness in stocks, whether it's the S&P broad index, whether it's the Nasdaq itself, and do we see some downside expansion there. If we look at the pre-market for both, you can see that they're trading a little bit lower here, as is QQQ, and I'm watching that mostly as we come into the 50-day EMA for QQQ, which we're trading below at the moment. Same thing for SPY, it's staying above it. And that's really just the outlook for this week. Are we going to see early month selling throughout the first week of the month? I'll break that down a bit more on the lower time frame, what I watch for trades wise, both on Bitcoin and QQQ. And gold and silver both went lower off the open. Let me get gold over here. Gold coming into its 50-week EMA Getting a lot of volatility, as you'd expect, given last week's move. Same as silver. Seeing now these main levels for both. Deep retracements after the crashes on Friday. I think we see moves in both directions, as we're starting to see coming in on gold after the open, CME open, flushed lower as low as 44.40 on gold, and for silver off the open also dropping lower as low as almost 70. But I think we see some upside on both as a counter trend retracement, and I'll be watching them up into probably the 50 EMA on the 1 hour for both, putting silver to around the 90 level, gold towards 5,000 on futures, and seeing where that settles. As for the dollar, I want to see if there's going to be continued dollar strength here after last week's failed breakdown. Got a reversal week after what should have been a really deep full breakdown. At one point we were trading below the prior lows, going for a monthly breakdown, and that got avoided with the wick and the reversal. So still broken out of its 2-year, 3-year base to the downside, trading below that 100 level, trading inside of prior range where you would expect it to move downwards towards the 90s, but in the short term there seems to be some room for a dollar rally to continue, which would likely flow through into weakness across the others for stocks and metals in particular. The metals obviously already on the downside. Crypto has been weak and has sold off deeper. So it's a week to watch for me, more so the stock side than the crypto side, as Bitcoin hits into some local support, unless we get that move back towards 80k, which I'll touch on trade of the day. The euro, after its long run of strength against the dollar, could be potentially reversing, which would be the opposite of what we've seen throughout all of 2025. Seems to be, at this point at least, a failed break to the upside, and we might start seeing some dollar strength coming in on a reversal, which would be counter to what we'd seen across the past number of months. So if you're a gold bull, what you're really watching for is consolidation needs to come in here, and it's going to slow. Volatility needs to drop, price needs to trade sideways. Same as silver, price needs to slow its downside momentum, but any bounces from here will be your typical lower high. You've had the blow off top, you've had the first sell off, you're looking at any retracement up, most likely to be this complacency shoulder or some kind of right side lower high, unless it's able to build its way back slowly through. So fast rallies would be worse generally. Generally, if you have a faster move up, it tends to fail like that. If it goes more of the slower and steadier grind back through, that's likely to be a bigger move for higher this year. Elsewhere, copper had been moving and it had that big flush as well. Too much positioning, chasing into the same theme, while on a high time frame it's still strong and rising, and copper prices are rising, and so too are have all of the metals been. Oil off the open having a sharp decline after a good close last week. Interesting to see how that develops throughout this week and what it flows through into some of the energy related themes that we've seen, as that was the strongest theme of January, was energy overall, and I'll cover that on today. We'll do a monthly preview for February. Some earnings coming up this week. We've got Palantir today after the close. We've got PayPal. There's Google Wednesday is probably the biggest. Amazon on Thursday. MicroStrategy as well, though MicroStrategy's price wise is pretty cooked. I don't think earnings are going to have much of an effect on that. So big ones this week would be Palantir as it's topping out. You can see Palantir has been in this big distribution, which appears now to be set to break to the downside. And I mentioned it on Alt Edge. What happens this week with it is going to be all important. If it's unable to hold at the 50 week, and if it can't stay up in this upper end range, it seems to be an upper end top distribution with a failed break, sort of a pretty classic head and shoulders type of pattern, distribution and deeper correction to come. Same as Amazon has been holding up pretty well, needs to get above and clear and hold this 242 level to keep building its way towards a new breakout, new highs. It's probably in the best spot. Google doing that as well, holding up fine, and just consolidation. The easy run of Google after the trade war sell-offs is over. Your easy markups. Now it's more of a grind, but continues to push higher. So how that reacts to earnings will be important too for the Nasdaq, as we had last week, a red week for Qs when you had 4 of the big tech giants all reporting earnings, and that's what I'll be watching this week. We'll see how that goes coming into the open today. That's the main thing. So trade of the day, I'll break down Bitcoin, break down what I'm looking for here on QQQ, and the start of the month. Are we going to see momentum continue to the downside, or a bit more whipsaw choppiness? Jim?
Before I begin trading, before market opens, I'm going to read my trading mantra. I am a winner, but I recognize and respect that I have the potential to lose a lot of money today. That's why I will make today's number one priority to not lose more than $500, my defined maximum risk. My only job is to manage risk and allow my profits to take care of themselves. The market is irrational and unpredictable. By staying humble, I respect the market today, no matter how good or bad yesterday was. One day can't make me rich, but one day can make me poor. One day at a time. My last week's trade performance was pretty good. It was the best trading performance that I've had I only had one mistake where I took a trade and my setup wasn't there. But in terms of following my rules, I took 7 trades, and 6 of them were like perfect, following my rules, everything. And there's only one mistake, so I'm very happy about that because we've cleaned up a lot of the mistakes. Looking at week 3, um, the journal just does not look good. We took way more trades than we need to, and yeah, this was probably my worst week. Week 2, it looked pretty good, but there were still some small mistakes that we need to clean up. Week 1, pretty good, lots of trades, but still some small mistakes. So week 4, we've completely cleaned up a lot of those mistakes. And week 5, I'm going for a perfect week where I just don't make any mistakes, which is inevitable, but mainly the small errors, the tiny errors, I want to be cleaned up. And it reflects in my journal for week 4. And week 5, we're going for trading execution and a calm mental focus going into week 5. Just taking my setups when I'm supposed to and really minimizing the errors and mistakes that I make. So we got 10 more minutes till the market opens. Let's just watch trade of the day.
Good morning, Jim. All right. So, trade of the day. Watching Nasdaq, QQQ. So, 2 setups here, both looking at the 1 hour. One is with the extended hours, the other is with just the regular hours. And as I touched on yesterday on Beyond Bitcoin, just watching if it loses the 50-day EMA, do we see it move down towards 600? And this week we've got more of the big tech earnings. We have Palantir today, who are not massive, but in the top 10, I believe, top 20 now. But the bigger earnings this week are coming from Google, Amazon later in the week. Those are some potential catalysts on the lower time frames. So that'll be something to keep an eye on. But I think that keeping it simple, during the main session, if we see price losing this 50-day, which is the purple line coming across, if price stays below that, that's what I'm watching for, and using that along with the 50 and the bands on the 1 hour. So what I'd be expecting to see if it's going to make its way lower would be to remain below and have retests and trade below and have that 50 and those bands coming down below and hugging alongside it. I'd actually expect price, if we come down, as you can see the dotted line, currently it is trading just below that 50. If it does go lower today, it probably finds some support at this initial level, these lows from a couple of weeks ago. And I'd be watching there for more so for retests towards any downside that could be incoming. And then of course, as we get into Wednesday, Thursday, how the markets react to the big tech earnings for Google and Amazon. So no positions there yet, but if I take them, it'll be first of all during New York session, of course, and also I'll drop it into the journal. But really just watching it around that 50-day. It is still sloping upwards as well. It is still rising. Dips do keep getting bought over and over and over again. So got to see a shift there for the market to fall. And I've mostly got my eyes over there because Bitcoin has, for now, gone down enough. And so it's had a very sharp, deep decline from 97 down to 75 in the space of 2 weeks. It's reached oversold levels in the short term. One of the things I check very rarely, and I don't use it for trade entries, but RSI on the weekly is something that I've been looking at. Yeah, we haven't touched 30 yet on the weekly, which is one thing worth noting, that when Bitcoin gets to this, anytime Bitcoin has been down after reaching oversold, so after any weekly bull market essentially where it reaches into the 70s, when it gets back to the 40 level on the weekly, it does hit 30. So if you look through prior cycles, anytime you reach oversold and you get below 40, which it got right down to 42 here in mid 21, but when we got to below 40 in 2022, we did eventually reach below 30 into that oversold territory before the market bottomed. Same as when we had the prior cycle and we were oversold for a long time. We eventually overbought, I should say. Eventually, when we started to reach that 40 level, it did make its way down to 30 on the weekly before bottoming. Caveat of that, of course, is you only have a handful of cycles to go through, and they've looked very different. Of course, some of them just explosive and then unwinds, but I'll still be watching that from a perspective of potentially there is a little bit more to come if this is going to reach that truly oversold level that it tends to bottom out at, which is 30, and touching that on the RSI. But like I said, that's more something I would look at as something on the side. It's certainly not what I use for any trade entries. It's just a higher time frame, classic oscillator for measurement of overbought and oversold. But this price path I drew out last night in trading analysis is playing out so far pretty normal. You set a low on a weekend that gets swept on the early week, and then you react off it. How price reacts right now, so really from anywhere here up into the resistance from Sunday, and obviously 80k round number level, if that finds resistance, if we stall here at the 50 on the 1 hour, I would see price returning back towards the lows. Whether it will break down through them or not is another matter. I don't see, I can see Bitcoin stopping here and slowing as it's sold off so far so fast and aggressively and into new lows, took out the 80k level, back down into 2025's lows as well. So it's in an area where support could come in, probably should come in. Also notable, the outflows of USDC, which I talked about all throughout last week or so, have stopped, and we're actually starting to see some inflows again. So 125 mil, then 150. So we're starting to see a little bit of that. At least the redemptions appear to have stopped for now. Whether that leads to anything more significant, I don't think it needs to. What I said last week, and what really matters with this is just that the rapid pace of redemptions needs to end, which it seems like it has. I think that will have weakened the market significantly as people were pulling out USDC, redeeming it, so lessens the liquidity available in the market. It doesn't even have to rise again, it just needs to stop falling. So that's what's happened so far. It's just stopped falling, a little bit of new capital coming back in, or I wouldn't even necessarily say new, but a little bit coming back in off the sidelines potentially. And interestingly, a couple of examples of that when we had last strong period of redemptions, which wasn't to the same extent we've had now, but coming out of October from 76 all the way down to 73, that ended right at the lows, 21st of November. That was the price bottom of Bitcoin, and then we started to see it recover, and that was when the market bottomed out. Now, of course, from November all the way through to December, we didn't have bullish Bitcoin price action, but it was the bottom. That was the price low over here. That was the 21st, and that was right around that time as well. So right around when those redemptions stopped, we saw a huge increase after that, and that was actually, I think, more of bearish, if anything, because you saw a lot of new inflows. We saw price rally, we saw ETFs get some inflows, and price didn't respect that, which I think has led to a lot of this redemption. But notable that the outflows have so far stopped, but we'll be keeping an eye on that if we see that pick back up again, or if we see it continue to stall at where it is at. And then for BTC, I'd look at it more from a perspective of revisiting the lows. I think 75k isn't the ultimate bottom for BTC, but it may well be for now. It could be a spot where price holds up, as we've had multiple different pushes down into these lows and then a sweep of the weekend lows and a reaction higher from it. It's more about time than anything. I think it's going to go usually full retracement like this after having a bullish trend, and clearly breaking that obviously would not be a sign that this is a long-term bottom unless you get much higher time frame confirmations like reclaims of 90 and 100. So there's a lot of work for it to do to flip this from being bearish into even a base that could be built. So is it that 75 is the logical place for price to stop as it comes back to a prior level of support and sellers exhaust themselves in the short term and buyers step in? For that, I'd be watching 80. And if 70 and 80 keep 75 and 80 keep holding as resistance and we chop around, then that's probably going to be the catalyst for it to flush deeper. But sentiment is in the toilet. Fear and greed is at like fucking 10 or something probably after the latest reading. 14, yeah, still extreme fear. And so I'd just be a little bit more on the side of chop probably for BTC. I do think an attempt to run back to the lows will come if it can't break through 80, but I wouldn't be an aggressive bear here from a lower time frame trading perspective. I just use the 50, and I will use the 50 EMA on the 1 hour as the indicator for that. I'll be watching it as if this is a sell-off that's going deeper, it should really just stay here and not go much higher, and price would stall around that and start to roll over, and your invalidation would just be that 50, as that's what it would follow if it's going to be going lower. And anything that doesn't do that, anything that comes down and up and starts to whipsaw around it either way, is likely what's going to lead to some more of this sideways movement, potentially moves higher, but
Order filled.
ultimately a stalling of the fast momentum and into some
Order
kind of
filled.
consolidation.
Ooh,
That's
strong
more
fake
what
out.
I'll be watching on BTC. So
Strong fake out. Should I wait for that candle close, guy?
my focus and attention is going towards the stock market for sure, as if Bitcoin is this leading indicator of risk.
Jump the gun.
Then I expect tech and stocks in general have much further to fall, even without being deeply bearish. Right? So like when you zoom out, I mean, QQQ is still in this nice consolidation after an uptrend. It can go all the way to 590 and still just be a support resistance retest, or it could even go to 570 and just be a 50-week EMA retest, which is historically a decent dip buy area as well. So that would still be like 5 or 8% drops, which would be a significant drop in the stock market given the recent price action. And I think BTC at that point, we may see it not actually responding so much to the downside unless 75k breaks. And so that would be my view for this week ahead. First spot will be, I should actually now redraw this because coming off of these lows, reacting higher, I think back to the lows, yes. And from there, what I would be seeing is for a move to 70, if it breaks
Order
75,
filled.
that's when I think that move can accelerate. But if it doesn't, I would expect to see price having some whipsaw in this area, and this just below 80 and just above 75 becoming a consolidation zone. And if we get a stronger rally, breaking above 80 would start putting you towards retest of Friday's levels towards 84. Jim.
Don't be scared, bruh. It's a pretty good setup, so it's a pretty good setup, man. Alright, we're in for a break even. Risk-free trade. This is a pretty good setup. I'm watching the volume and it's increasing and trending. It's really strong at that last point of control. Take profit. Can we smash that at around this top range? We have room from these as well. This top end of the wick. There's lots of room to continue pushing up. Volume seems really strong. It's a good trade. Jumped the gun a little early, but the volume just looks very strong. Watching the volume here. I want to see that trending regime to continue to increase. Bull strength, the bulls are in control. to let the market do its thing right now. Just have to let my system do its thing. Seeing harmony in price. We just want to watch this trend regime. If it dips below, then that means the trend is weakening. 2 more minutes. This 15-minute candle close is going to be bullish, which is good. Trending regime, I want to stay above 90. Bulls are strongly in control. Can reach all the way to 7027. This is the next resistance at this level, which right where take profit is. Looks like we're making that push. I think these are 10-point spreads. So let the market do its thing, man. Trending regime is increasing even stronger. Buyers are still continuing to enter the market. The trending regime is just off the roof right now, so I don't want it to dip low. If it dips below 90, I'll move my take profit to that 5 points more, but until then, I don't think it's gonna reach, because this is a healthy trade. It's a healthy trend upwards, and we made a lot of room down last week, so it could be retracing a lot of this. Could even come to this top range throughout the day. This is a trend continuation. Price stalled for what, 3 hours? So maybe the next hour or two, right? It won't really stop until 11:45. So if we just hold till like 12, that's usually the end of my trading session. I'm just watching the regime and the volume. Let's have this 7K level. 7K psychological level. I'm watching this trending regime. If it starts to decrease and we stall in price, this next 15-minute candle close is also pretty important. But still bullish. Nothing has changed. Just let the profits do its thing. Don't get shaken out. No reason to get scared. Right, we don't want to get shaken out of the market for no reason. And profit continues, or the trade continues to go in our direction. This next 10 minutes will be pretty important. We want to see this a stronger push. We look at the 1 minute chart here. Don't necessarily want to see it close below here. Looks like it is slightly decreasing, but it could just be breathing. 4 seconds for the 5 minute. That's good close. This next one, we don't want it to close below here. These candles are decreasing. Stronger. 100% bull potential still. Consecutive bullish candles. Trend is increasing. Increasing very strong. That's what I like to see. 27 points. Almost at our take profit there. But we are pushing for a little bit more, which is I'm gonna secure profits, and we'll just do like 25. So I want to push for more there. Stop loss is like right there. That's 6.9, 90 level we haven't even reached yet. The market regime has not hit below 90, so it's a strong confluence to just like give some breathing room and stay in this trend for as long as we possibly can. But at the same time, I don't want to give back profits. It's like it's pretty tricky. Right here is full take profit, and then we're reaching for another 7 points, 7.5 points. We're respecting this moving average right here. Maybe if we close it below it, I don't know. Looks like we're gonna make another push up right now. The trending regime slightly decreasing, but still super strong. Buyers are still in the market. 15-minute chart, candle bullish. This next 5 minute is gonna close. Let's see how it looks. It's a super healthy, strong trend. more buyers on that last candle this time. This is decreasing. We want to see it increase again for another leg up. Can it do that? Still respecting this EMA level or this moving average. So it's respecting it. Buyers aren't letting it go lower than this. I think we can definitely make another push up. See respect on this moving average. We see trending regime is slightly decreasing, but the buyer volume is still there. If it drops below 90, we'll probably be hit or stop anyways. Which is totally fine. Four more minutes till the next candle close. I think we'll get stopped out here. Nope, not yet. We're still fighting. But if I was gonna re-enter, if I was gonna add in, I would add in. What was our exit price? 697. 69796. So we made a 4.3 R on that trade. 4.3 R. Not bad. We just missed our full take profit, but we were going for more anyways, so. Combine, almost there for funded. We've almost passed the account. Just a couple more good trades. And we're almost there, about $500 away. The combine, the funded. Accumulated 5.5. New week, 2 trades. I'll take it, man. 1 loss, 1 win. I'll take it. Yeah, that was cool. That's it for today. rejected this here. So this is the new range that is formed. It might reach it. Trading regime is still up. So, ooh. It's interesting to note because if we had held our stop loss just at break even, we would have got there anyways. So that's what I'm talking about, letting the market do its thing. It's like, or letting the system do its thing, because that's what this system is designed. We kind of stepped in front of our own system. It's always tough to watch. See the market continue to go in your favor when you got stopped out, or when you like trailed your stop, and then that re-entry would have been correct. Would have been a sick re-entry too. But I think it's fine. I gotta be grateful for what I had just achieved. This is a healthy entry point. This wick here for another 20 points. Yikes. You know, the move happened, we logged it. I think that's totally fine. This one right here, bruh. Why do we gotta get stopped out right there, bruh? Because we entered here, stopped us out, then went. Then we re-entered off this candle. Should have entered off this candle here. How was I supposed to know? It's all good, guys. Win some, you lose some. That's just the way it is. But these like little things, you know, that I was just leaving extra money on the it's just little things like that where it's like, did I even need to trail my stop loss? No. Could have just left it at break even, would have hit full take profit. So that's interesting to know. It's very interesting to know. The market is still going to continue pushing too. I don't think it's going to push very much higher, but I mean, it can do anything, right? We have lots of room to go up. Could even go to 70 points. Definitely cut our position early from we cut it out like right here. So we gotta just wait for these 15-minute candles, bruh. These 15-minute candles to close. So it wasn't even bearish, but it does look like a bearish candle. Looks like we're gonna reach that 7K level. It's all good, man. It's all good. So just watching the market continue up. At 20 points. It's okay, man. My pre-market notes though were pretty much on point. Well, there's obviously, like, I wrote out 3 scenarios, but I was watching the regime indicator and volume for only strength. For any strength. If low strength, they're 20 points. Honestly, we couldn't know whether the market was going to reverse, but really, technically, even though it was a winning day, we technically broke our rules because there is no rules in my back-tested system where I trail my stop loss. So I was using my intuition to trail my stop loss, which is faulty. Clearly it's faulty because price continued into our direction. If we had followed the rules up here, 15-minute range breakout, we would have entered here anyways though, but we still would have caught. And the 5-minute chart, see how the 10-minute looked. 10-minute candles, it's good to trail. So we might test for that. We might confirmation candle had not closed. Market context, trend regime, volume, and order not closed. Market context, trend regime, volume, and order flow were accelerating and aligned. However, the trend regime has not yet reached your defined sustainable threshold. Execution quality, the reader was correct. Sustainable threshold. Execution quality, the reader was correct, but timing was discretionary instead of rule based. Management took 21.50 points on a trade with 29 full TP. Price later hit full take profit. Primary error, intervene in trade management instead of letting the tested exit logic play out. Key miss, if stop was moved to break even only, the system would have captured full take profit. Pullback read, correctly identified a healthy continuation pullback. Fib, price respected the level and expanded to full take profit. Setup remains intuitive but untested. Emotional state, mild shakeout, fear of giving back unrealized gains, not panic, just early profit protection. The real difference between this was live. Here's the important part. In a backtest, this is execution noise. In live trading, this is discipline under pressure. You didn't fail at analysis. You felt real P&L pressure and slightly overrode your process. That's normal and fixable. The actual mistake, live specific. You trusted being right more than being mechanical. Live trading rewards boring execution, predictable behavior, repetition. You momentarily shifted from operator mode to manager mode. Live trading adjustment very specific. Entry rule tighten. If your system requires a candle close, no expectations in live conditions. Because early entries include emotional load, increased emotional load, increased management temptation, reduce clarity under pressure. Winner management rule. Once trade is in trending regime, in structural condition. Hard rule, move stop to break even, hands off until take profit or stop. No scaling fear, no protection green. A shakeout insight, this is gold. You weren't shaken out by the market, you were shaken out by watching open P&L, knowing payout proximity, wanting to lock it in. That's not weakness, that's account context pressure. Solution, predefine exact management states. Before entry, after break even, after continuation. Reframe the results, this matters. This was a profitable trade with a correct read and a small execution leak. That freaking correlates to something. That's elite level territory. Most traders misread trend, mismanage losers, chase late. You read trend early, took profit, identified where systems would have paid more. That's refinement, not repair. One rule to burn. If I move to break even, I surrender control to the system. No regret if it runs, no regret if it stops. If you want next, wow. Okay, so some valuable insights right there. So tomorrow, if we get in a trade, we move it to break even, we're going to let it run. We're not going to move it. We're not going to risk management. We're just going to submit to the system that we've backtested. Because that 4.3R could have been 6R and it would have been a total gain of 5R, which is fine, but it's only a total gain of 3.3R, which is fine. Because we learned 2 trades for Monday. Profitable Monday. Mondays are always good because there's no news. I'll take it, man. I'll take it. But anyways, that's my trading day. Professionalism, execution, miner execution leak, and that's quite interesting. It's very interesting that step in front of the system, let the system play out. I pretty much have to submit to the system. When I enter and I move to break even, I have to let go. I can't secure miner profits. I just have to let go, because during those big gains, just enter or just add into the trade for that last like however many points, but it has to be tested. So the moral of today is that you don't want to have regret from not following your system.